Hi there and welcome back to the Keyzone Traders Trade of the Week. I've had a couple of weeks off where I was on a holiday and whilst I was away I didn't trade. I gave my mind a break. It's really important to do that and recharge the batteries every now and then. It really refocuses the mind for when you come back into the market. So I was back on a Monday, so I was trading again this week and we're going to jump into the Keyzone Traders Trade of the Week. And this week we're going to look at a trade that I took and it's going to show the real frustrations of being a trader. Hi there traders, so this week we're going to look at a trade that we took on GBP Aussie dollar, so sterling Aussie, the pound versus the Aussie dollar, and it's a trade that we issued for our expert alert service. Now you can see here that we had a zone of what had acted as support over here several times. So we had support all around this area here, we had more support on this touch here, we had another touch of it here. We had a false break of the zone here, but then it broke back above it, and then we finally got the breakdown. And this was the first retest of that level. So it had a little bit of defending that zone before. We had the false break, we had the confirmation break, the acceptance below, and we were just retesting it. This line here is the higher time frame moving average. So this is the daily 20 moving average as well. So you can see that's coming down in line with it. So we had that, the higher time frame dynamic resistance as well. So quite a lot going for this trade. We got the reversal signal here on this pattern, on this signal here, which meant that we issued a short trade. So we sold the just below that candle there. We had our stop just above the candle, just above that zone there, and we had a 2-to-1 target. What we also did was we issued a half profits target for 1-to-1. So once we got to 1-to-1, we was going to take half profits, and then we was going to let the other half run to a 2-to-1 target. So we would have left our stop in place, made the trade risk free, and then let it run to a higher target for a better risk to reward. So that was a trade idea, and now we're going to have a look and show you how the frustrations of trading. So we move forward and we got a couple of hours of a bit of chop, and then it moved down really nicely. And notice here how it looks like it's come and hit our 1-to-1 target. Now, I can tell you from our broker, we actually had an order set for 173.22. Now, the offer price on our broker platform, which is where we would have been closed out at, actually got to 173. 2-to-1, so it missed our half profits target by 0.1 of a pip. It's like the closest you can possibly get without actually hitting your target. So what we did at that point was we then thought, right, okay, we've got so close to our half profits target, we don't want to take a full loss in this. So we moved our stop to entry just to protect our capital, just to protect our risk, and the market came back and it just clipped us out at our entry. You can see it took us out of break even here. But as you can see as well, it only just took our entry out. It come back basically to our entry. I think it traded like 1.5 pips above where our entry was before it then went back down, which would have then taken our half profits and would have meant that we could have kept our stop above here. So we were out of the trade for break even. But just goes to show those real fine margins can make a huge difference in trading. If we'd managed to just clip our half profits target, we would have been able to keep our stop up here and we would have still been in the trade. If we had managed to have an entry slightly higher, or if the market had just traded 1.5 points lower, we would have still been kept in a trade, and then we would have hit our half profits target, and then we would still be in a trade with our stop above here. And then, as always, what then actually went on to happen was the market actually meandered around a little bit, almost actually come and took our stop here before actually going down and hitting our full profit target here. So we got a break-even trade on this. If we just left it alone, we would have got a 1.5% return. But it was just those really, really fine, small margins. It was literally, we was taken out by spread on those. So it just goes to show that even with extremely tight spreads like we trade with now with our value trades account, it can still become, those fine margins can still make a big difference in your trading. So that is the frustration of being a trader. It's responsible risk management to protect your capital at all times. You just have to learn to accept that there will be frustrations, there will be moments like this as a trader, but know that by protecting your capital, you're actually protecting yourself as a trader and making sure that you're there for future opportunities. So, although this is frustrating, very fine margins on another day, probably 9 times out of 10, maybe even more than that, 99 times out of 100, we would have hit our half profits target and it would have been absolutely fine. But it just is the way the market works. Sometimes you have to move on, but know that you're protecting your capital. So that's our trade of the week. I hope you found it useful. Any questions, any comments, please let me know in the comments box below. Please subscribe to our YouTube channel. If you have any other questions, I'm more than happy to answer. I hope you're finding it useful. I hope you had a great week and are having a great weekend. And I'll speak to you soon.